Oops. Okay. Hello? Okay, good. Thank you. Now I know I'm connected. How you all doing? Very good. How many of you got this GA to the downside last night? Yeah, tonight. It was tonight. Yeah, Friday night he did that. Anyway, yeah. You see people go all the time, but accident or sickness, and but this guy just he didn't mess things up. Anyway, it was his time, so he left. But the way he chose was not not right. Anyway, but he left a lot of us very disturbed. Me also. Um, can't forget about what happened, even if it's been a week now. But it's okay. Yes, I've been very disturbed and not organized at all. So, if I make any mistakes, forgive me for that. I just wanted to do this webinar so I can, talk to you guys and have my mind go somewhere else, not think of that anymore. So let's get started. I think it's, yeah, okay, it's 12:02 already. All right. Okay, most of us are here. Okay. All right. So, yeah. Okay. Very good, Awan. 94 pips, right? That's nice. That's nice. Was easy, right? I made a little mistake, little off judgment, right? I was here. This is the chart, right? Farnazi H1 chart, and I was thinking about this. My trend line was a little off. I had it like this and this connected, and then like a channel. So it was coming around here, actually. Hi, Jamon. How are you? Okay, so let's get on it. So now see this here. This is the area 8303 and 8325. I have marked, and since the channel was coming down here, okay, just 1 minute. I got a lot of questions, so I'm gonna answer one by one. All right, Jamon. First of all, I don't use Bollinger Band at all. And I don't intend to, because too many things make a mess out of it. So everybody makes a little mistake here or there, but it is not my thing. All right, maybe it is working for you, and it works a lot for a lot of people. A lot of big guys uses it. That's different, but it's just not me. Never understood that thing. And Bella, hi. Yeah, okay. You didn't miss anything. You were just starting it, and then if you leave early, that's fine, because I always record these things, so I will be doing that. And Rod, hi. How are you? I hope you made some, right? And you always do on my charts. Okay. Anyway, So this was the thing. So it was, obviously I forgot to place a trend line. Let me see if I have the chart, the old chart. I usually open it up before what is it? Aussie, right? Pound Aussie. Okay, here. Where does that chart go? Okay, here. See, this is the one. So usually what I do is when I make the channel, excuse me, I have it. Then I also have a trend line. Remember that this is my rule actually, which I forgot, last time. You all know why. So what you do is that you draw the channel as well as place a trend line. So what happened is that remember that one rule and this phenomena that everybody's talk about, like fake out. I explained so many times that nothing is a fake out. It's just like if the channel coming within the trend line, then price breaks the channel and goes to the trend line and bounce back. If the channel is coming, if the trend line is coming inside the channel, then it will break the trend line, will go to and hit the channel TL, and then comes back inside the TL. And then that's the phenomena that people call a fake out. They're breaking a TL and then coming back. It is actually going and hitting the channel line. I have noticed that, and I have witnessed, and I have taught you in my webinar so many times, that phenomena. Only I forgot a lot yesterday, but not day before yesterday, right? So this was, if you draw this and this, it was coming around here, and this was, see, I already had this mark here. So this was the area actually that it came and regarded that, and then boom. So now we are back to 81. We started actually, for a couple of new people, I just want to show real quick that we started from here. First says below 83, then 81.37. So this is what we did, right? We came to 81.37, and I was expecting that a little bit of a retracement before dropping, but it went all the way back to this TL. Okay, and that's usual. It's not, I'm not saying that unusual, but I just didn't pay attention, to be honest with you. Okay, attention is the main thing. Wow, Rod. Okay, 350 bit between pound Aussie and euro Aussie. Pretty nice, man. You know what? I'm gonna have to ask you, Rod, to do the webinars for me. You're doing better than me. Okay. Uh, all right. So back to topic. So we went up again over there, and then this is the chart I send out that once again we stay below 83. We go back to 80, 137, and then 80.53, and then 8009, which are still to come now. Yes, Sean is recording, and I will post on the website afterwards. And within an hour, I will post it because I have to convert the file. I'm not saving these webinars to my GoToWebinar website because they go bad, and I have nothing. I can't do anything with them. Okay, I kind of lost all those previous webinars. So what I'm doing is I'll do that with their website. I'll do the webinar, then I'll convert the file so that I can upload on a YouTube. Then I do unlisted, so it's not for everyone. It's only for subscribers, and then I put that YouTube video on my website. So you guys can go and see it anytime you want, all the webinars, but you will we will lose all the others that I did previous, like last year, probably, way before that and I saved it on the GoToWebinar. They are gone bad already. Okay. Or they are, some of them still working, but I don't know what it is now. Anyway, so it's there. Okay, so okay, all right, Ben is asking to explain it properly, so let me go on that, and then I'll show you what it is. Channel and trend line phenomena. I think I have it here. Okay, now when you have something like that already, and then you're expecting a turning point, this is the TL, all right? you have this, and then the highest point you choose, and then that's the TL. Now, what the channel is that from here to here, and then this is point 1 and point 2. Then you place it on point 3 to get the point 4, a turning point. Okay, so this is, you draw here, which I did that day, and you can see the price came, and first it regards the channel and drop back, pull back a little bit, because it's not only channel, it was the 83.15, big number as well. But then again it went up and broke the channel and went to the TL and tried to break the TL, failed that, and then it's dropped back inside the TL and then the channel, and right here you have a lot of setups coming down. This is what happened. But sometimes what happens is that you have the channel to the upside, like let's say this black line is the channel line, and then blue line, for example, is a TL. Then you will see, what you will see is that a lot of people don't draw the channel, they draw the TL and then wait for a bounce. So what the price is doing is breaking the TL, going up, hitting the channel trend line, and then coming inside the TL again. And if you don't have that, let's say, understanding of this whole thing, that what happened, that you will see, the price broke the TL and came back. So this is what everybody talk about, a fake out. You probably heard that. It's a fake. It's not a fake out. It's not faking price. It's too big of the market. I mean, it's the forex market is too big for anybody to control or doing a fake thing or this and that. It is just that these two things goes side by side, trend line and channel. Okay, so you can also have this channel from either take this leg or this leg, whichever comes outside. So if you take this, it's also proper, and then you can use the starting point of this leg. If you're taking this leg in consideration and this, then you place, this is a third point, so point 1, point 2, point 3, and then point 4 is right here. Okay, so the channel was here and the trend line was little outside. I disregarded this candle actually because if you notice that this was, a price was here, and then when the week opened up, it opened up from here. It was a gap, so gap kind of thing. So it's okay. A lot of things happen that we cannot cover everything. Okay, now another question coming in: what is the difference between TL and a channel line? So let me explain it one more time from the scratch. Okay, price always makes the channels. If let me see if I can show you previous channel, and you can always need to pay attention to those channels because they work very beautifully. There is a webinar recorded on my their website. So channels and trend line, just you need to watch that. Okay, so see, this is how the channels are, that you connect the two lower lows and then place the duplicate line on the higher point between those 2 points, like this point and this point, these two lower lows. Like this is a low, this is a low, and highest point between these two is this. So when you place on that, then you have a channel. You see how even all the way come down here, and then this price regarded the channel. Okay, so this is how it is. So now if you go and you take, okay, once the channel hit, then disregard that and use the next 2 points, like this one and this one, then place on the lower side and see what happens. So this would be the point, right? This is the middle, the lowest point, right? This is the highest. I mean, these are the 2 high points, and a move and a move, right? So you take that, and the lowest point in between these two is this. When you place that, and watch how long after that price came and kissed the line. It always does that. You just have to pay attention and find it. Okay, it always does that. If you keep drawing these trend lines and channels, the channels are very beautiful. They work very nicely. Okay, and you get very key. If you had done this and then you see a hammer like that, what do you think? And not only hammer, it's a 8137 as well. Okay, it was a clear sign that we wants to go up. The price wants to go up. But I missed that. I wasn't paying attention to that. I was expecting that, okay, well, you know, the downtrend, we are in the downtrend, so let it retrace a little bit, then we go to the downside again. We did it nice and clean. But the channel that I draw was this. And but there was this line was cutting it. So you also have to draw a trend line, which is if there is something going outside, right? So you keep that. Always do that. If the channel is coming, you know, like there is a point that is coming outside, you can take the channel here instead of taking this. But this is not a straight thing, so I just disregard. This is a straight leg. This is not a straight leg. You have like 1, 2, 3. It's a lot of wobbles here. So, but if you could take the channel and place on the tip of this, then you get this. So like a double channel. But you went outside. So this was the phenomena working here was a trend line. Breaking the channel, going outside, hit the trend line, coming inside again. Okay, so our point was if, no, not that, where'd it go? Okay, this was that if we come back below 83, right? So we came down, we went up quite like I think 83.60 or something, and then start coming down. And there was another question in the email came to explain that how do we know if we are holding or breaking something? Like if I say, okay, if this area hold, then go short. If we bounce from that support, then we go long. So a lot of examples, but let me just continue with this pair and see if we can find proper explanation for that. Okay, so we were waiting here, right here, to go short below 83, but what happened? Let's go on a live chart. Okay, so what happened is that it didn't stop here. How do we know that it's not getting rejection and short? Should we go short or not? Right? That was a question. I don't know who did that. Let me ask the question. Chantil? Okay. Oh, you're the one who asked, right? Okay. All right. So see, this is where our magic wave strategy comes handy, and that is the key. We don't, a lot of people ask me, okay, if hourly candle closes, that is the confirmation, or daily candle close, that is a confirmation, or inside bar or outside bar. It's a lot of things out there, and you can use it, but I don't. And because if you use too many things, a candlestick formation, this and that, it's a lot of things, then you get confused. So that's why we have this here, KISS, KISS kind of thing. So keep it simple, right? So what we do, this is the area we need. And I told you that if we pop above it, then we will go on to the upside. Then we will see, wait for the retracement. We will let it go. Then we'll wait to see if, it goes up here, somewhere here, and then drop back, and then find, on a retracement and continuation, we will go. And at that point, we will leave this pair alone and go maybe yen pairs, pound yen, because you notice lately that I'm not working on those yen pairs. But when I'm on them, euro yen, pound yen, and Aussie yen, everything we are having, it's all depend on how the index is setting up. If the index is getting ready to drop, I'll show you yen pairs, what happens. We did good there too, because yen index dropped, everything was dropped. But here, back to this topic here, that, if we go there and we wait for a drop, so far even this line I had it drawn, and you can see that we hit here, here, and drop. Another thing that keep in mind, the stack. If you go the other side of the 200 stack, we change trend, at least swing, not the trend, okay? But if it stays on one side, then the trend is intact. Now, the swing changer is my 200 EMA of a 15-minute chart, a blue line. Let me go and show it to you where it is. Okay, this blue line, we have 4 lines in the 200 EMA stack. This black line, this is 200 5-minute, blue line, white line, and this final line is the red one, right? If the price goes the other side of the red line, then everything changes. That, swing changes. Even if it's a retracement, then we can do the analysis to see if it is just a retracement. Then it will go above maybe 100, 150 pip on the other side of the red line, and then drop again. So then comes Elliott wave and harmonic patterns in play. You have to do everything. But to make an entry, to see the turning point we are talking about right now, a turning point, expecting. We already did the Elliott wave, our channeling and everything, all the study, and we pinpoint that this is the area we supposed to have a turn, which was this area, right? Okay, so we went above it, and how do we know? The question was, how do we know? It is for everybody, because I'm explaining, and I'm not gonna too much today because this is very important. It's Friday, and thing gets messed up anyway. So have to do all over again. There is no setup right now to tell me. I tell you guys for me, and I'll over the weekend sit down and see all the new setups, and then I'll send out the charts. There are some building. I'll tell you. I'll show you right now. But okay, so this is the area that we are expecting a turn to the downside. This is what I said. We're going to go back to 81.37. So how do we know that we are going there? When do we start going there? Right? That's a very good question, by the way, Santa. And I'm explaining it, and it will help everybody, I'm sure. So let's go back again on a live chart and see. First of all, here, okay, this candle, this big candle, sort of a rejection, and then it's still a bullish candle, right? Let me go on a live chat and see what was it, the date earlier. This, okay. So it was this candle, but it still is a bullish candle, one hour bullish candle, and it was, in my time, I have it here, 320.00 exactly. Okay, so let's go and see what happened on 5-minute chart. What is happening and how to analyze that. Our stacking and our magic wave entry. Do we get there or no? Simple as that. Okay. Forget about everything that, it's just a Bollinger Band or anything else, or any indicator or inside bar or outside bar. It's like hourly candle closing or daily candle closing above or below. We don't need nothing of those things. All we need is our 200 EMA stack and our magic wave to show us the way, the entry. We do our analysis. We need a turning point here to the downside. We need a turn to the downside. Let's go on a 5-minute chart. Okay, it was 3:20:00. What is the time? 00 means it ends at 1 o'clock. 3:20. Was that 1 o'clock? Did I see it right? Okay, where is it, man? Okay, it's not here. Going cuckoo here. 3:20, 1 o'clock. It was right here. Okay, this is the area. Now, according to my rules of this magic wave, can we go short here? Looking at this wave here, simple. Okay. Yeah, we're waiting for a turn, and we need to go to the downside. Can we go down here? in this area? Anybody? Okay. The wave is going up, the price is above the wave, everything is above the 200 EMA, above the 5-minute, 15-minute, so we can't go short. So we know that we are, and again, remember when I said that we are in the no man's land between this blue and red line, between this 200 EMA stack is a danger zone. It can do anything. It can break it, go on the other side once we are on the other side of the red line. But it can bounce back again and comes below the black line or the blue line, which is 15-minute, 200 EMA. Okay, so these two things can happen. But if we go above, then yeah, this is the scenario for a long setup. But we expecting a short setup. We can't go long because we have this red line right above you. In our analysis, I mean, a lot of times we go long without thinking about this red line. Once, if we have a bullish, let's say bullish girdle, and we are bouncing from here, from bullish girdle, then we disregard this red line, blue line, because our analysis is telling that we're going to go long. So then we don't care about this line. But right now our analysis are asking to go short. The chart that I send out, that we will go back, expecting that we will go back below 83 to go to 81.37 and then more further down. So that was the analysis. So we look for short, not long. If it goes, we leave it alone, leave it alone. At least I don't bother unless, confirm that, yeah, okay, forget about it. The downside, we are going up. But as long as you are inside this stack, you don't forget about it, because you are at the TL and the channel is right there. Okay. You are here. You have this support here as well. Let me mark it. What is it? Because I didn't mark it before. It's important. 83.57. So always mark these highs and lows and draw those lines on the smaller time frame, 5-minute chart, just to see what happened around those lines. 83.57. Okay. 33.57 is this low, and you can see how nice the price comes here. What happened here? Whoops. See here, and it was also the red line. Man, what happened here? Okay. All right. So as long as you have this support here, resistance, strong resistance, and after a long move, you have a resistance. Even if it breaks, I don't care, because it's gonna retrace. So breakout trades for me is a big no-no. People do that all the time. They make money or not, I don't know, but I can't handle that. Most of the time you go in the red. If you break out, sometimes it just shoots out, all the way. But most of the time what it does is that you have a big move here. It will go up a little bit here and then come back to test this line. So you make an entry here and you go red. Anyway, so this was the resistance, and on a 5-minute chart, we are waiting and we don't get nothing until we go and hit this. What was it? 83.57 line. So on this 5-minute chart, I don't have those horizontal levels, but I'm going to draw it right in front of you. 83.57 is, that low was this, okay? And then you have, I explained this on my last webinar, right? All of those numbers here, this is the numbers, and this was 83.25, then forget about that. 83.15, we just mark 83.15, see what happens. Oh, it is already marked, sorry. Right there is 83.15 line, right? So you see this rejection over there, rejection here, then stays below 83.57 and start, ranging a little bit. And what is the time? Time is also very important. And this is London session starts here somewhere. And then we are getting into US session right here, okay? And now, after a little while, the price came below here and see it's like 1, 2, 3, 4, 5, 6, 7, 8 candles hitting this 83.15 and it's getting a stop. Small, 8 small candles. And then you drop. So forget about this whole thing. Can you see this one as a setup, a short setup? Anyone? Can we take this candle here? Is it according to our rules? Okay. And then it goes on a sideways. This is, if something change direction and come into, like go on retracement and then finish the retracement and continuation and then go horizontal like that, this is a gold area. It goes sideways and then get close to the EMAs and then boom, drop. Always does that. Always. Okay. But anyway, this was a very, very good entry right here. There was someone that says that, I never saw an entry. I mean, if you don't understand and don't look for it, they're not going to knock on your door and say, I'm here. We have to look for these things. Understand the whole thing. Understand this stacking phenomena, how the price retraces and goes back into this stack of EMS. It always does that. There's a webinar, a recording, a very good recording, and explains in depth the whole phenomena. So you will understand it, how it does again and again and again on a 5-minute chart. That's why I have all of these 4 EMAs of different chart on 5-minute chart, so you can see the whole stack. It's a black line, blue line, this white line, and this red line. Okay, the price always get to these, if like get away from it, and then slowly goes back to these inside this area, and then either break it and go the other side or get rejected and comes down again. And that's what happened here. So this was the entry. And after that, how about this one? 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 Even the last one, this one, gave you from 81.92 to 81.37 was the target, right? How about the current one right now? As we're speaking, it was building. I forgot I was telling you to, do it. I'm not taking it because it's Friday and it's, 12 o'clock. So forget about it. It can drop 40, 50 pips. I don't know. But it's not me. I'm not going to take it on Friday. I'm done. I close everything. But these are the things. But it sees how far it is. So it has a good chance that 81.37 hold for today. We're not going to break it and then go back again on Monday and then probably go to the downside. So it is a very good chance. You have to understand also the days, the time, it all in the PDF. You know what? I'm going to soon replace that PDF into a 1-hour video explaining from start to finish everything in that PDF that I sent. That how do you get the emails in your email, and then how do you have to download in different folders, and how to set up the charts, and what are the days, important days. And Monday, if nothing happens on weekend, like a G8 meeting or something, big thing, global thing, then Monday is very slow. Okay, Sunday, Monday, Tuesday, we start setting up. Wednesday, we start moving up a little bit because of some kind of news or something. Thursday is always a very, very big day. Thursday, 90% of the time, you're going to get big moves on Thursday. And then Friday, either follow up or start ranging. So that's why Friday is very dangerous, because what mostly happens is that a lot of big guys take profit, which is completely out of trading. It's like stopping the trading, not trading, right? It's getting out of the trading. So it has the inverse effect on the market. As if it's a bullish move and then everybody's going up, and then all of a sudden big orders getting out of the market, then the price pulls back. So you cannot see that coming out technically. You can see the resistance, right? And then it always pulls back. And then what happens is that sometimes it pulls back and then something else happens, and then it makes a move again. So Friday is, very shaky. You need to be very careful. Most of the big guys, they stop trading early in the morning on Friday. Don't wait for the afternoon. So that's why I said that even this is what the setup is. It's a lot. Okay, and there is another question came in that is very easy to see outside, but not when it is happening. So right now, see, it is not. If you pay attention, this is a proper setup. This is even save this picture. Okay, mark it down. The only bad thing about this setup is that it is on the Friday afternoon, and it is too far from these EMAs. Okay, look at that. Red is way up here, then white, then blue, and then black, and then it's right here. So setup is too far. So every time the price goes this far, it goes back to at least the blue line, okay, which is 200 EMA on a 15-minute chart. Okay, this is a swing changer line. If the price goes the other side of this blue, then most of the time it continue in that direction, at least to the red line. But if you see, if it is hitting and then getting rejected, it is a continuation always. Okay, the question is coming that based on your setups, we have to wait for target. What does that mean? The targets are completely different. I'm not even talking about the target here. Target is that when you need to get out of the market. Like these two numbers here, let's see. Okay, here at the chart when I send out, right? So 83.15, pay attention to these levels, and you need to see the webinar where I explain how to find these weekly highs and lows and put it on the chart. So these numbers, where they come from, these are weekly highs and lows. So one number breaks, you go to the other number. That's the target. It's not going to be always perfect. I'm not going to be always perfect. Okay, I don't rule this market. Okay, but most of the time, you can see that I'm right, but it can always bounce back because of the news, because of something else. And always, like here, simply, I was thinking that it's going to be turning from exactly here, but we went above what? From 83.15 to 83.60, 45 more pips to the upside. No big deal. There was an area here. I didn't mark it, but I had this white band, right, showing that this is a possible area. So even if I miss it, you guys just watch it, that this is the turning point. And Sam said, well, 83 goes, then we go to 81.37. And look how nice. Both of the time, this first trade was here. When I said 80, we go below 83, we're going to hit 81.37. We came and hit that. Second, again. So this is 100 point here, 100, just 200 point. So a lot of people out there, if they make 200 for the whole week, they will feel like a king in the world. Believe me. And here, in just one pair, 1 hour chart, you have 2 trades for that kind of pippage. Simple. Okay, just pay attention. Now, I said 83.37, then 53, and then my final target is 8009, which is not going to happen today, even though it was a target. But things doesn't go on a straight line, right? Right here, you drop here, you little wobble, probably 23% line, and then drop. So here, Friday, I think we finish here. We're probably going to go up here, hit the channel TL or now, okay, now the channel is different. Let me show you how to do it now. See, once this up move is done, what you have now, you'll be paying attention. You're drawing another channel to the downside now. So this is one. And now the lowest point between these 2 points is this. So this will be, and look how, you see, I didn't draw it before, but look how nicely it comes into, the intersection of this 8009 and this. You see, if it comes straight, it is coming straight down here. And you will be amazed if you keep draw these things, you will see for yourself, those points screaming at you that I'm here. Okay, now this is our final target, which is if you take this, maybe 100%. Let me see if it is AB is equal to CD 100% coming as well. How do I know? How do I know that thing? You see that? I just said that it is coming 100%. Yes, it is. This white line is exactly 100%. A, B, C, D. 100% is 80012. My number is 8009. Even Fibonacci is going along with me. Just joking. I'm going along with Fibonacci actually. Because once you understand this, Fibonacci, trend lines, and channels and SNR levels all are working together. They are all working. The calculation is together in all of them, all four. These trend lines and channels will give you perfect Fibonacci calculation as well, if you understand and do it. And these weekly highs and lows, they are not in random. They are because of a calculation. You just have to find out, that's all. And it behaves like that. I'm keep telling you these numbers, and it's just keep ping-ponging, between those numbers. So the next number, we're going to drop this, bounce a little bit maybe, but may not happen today. I seriously doubt it, but it can happen. But I'm not interested. If you want to take a chance, well, the setup is gone. Not gone, but yeah. See, another thing is that if you have a setup, and if this thing comes all the way down, but the price don't break the low, that means it's not going to go. Okay, it doesn't have the volume to go. Okay. All right, so what we covered so far, the last, well, let me cover a few things. I sent a tweet this morning about Euro Aussie, that it might go up. Let me show you why and what was the reason for that. And next week, we're going to see what's happening on that. Oh, man. I have it here. I want a clear chart. Okay, forget it. I'll make this one clear. Any questions so far about the entry system? I think I'm going to explain this entry thing every webinar from now on. Because, okay, now you see what I'm talking about? This point here, and it is kissing right now the trend line. So I was expecting because another thing that Aussie index was at resistance. And it is at resistance. See here right now? Okay, exactly at this point. So I thought maybe it's going to pull back a little bit, and that will give us an up move in Euro Aussie, because it is exactly at the TL. So we may get a bounce, but we didn't get a bounce there. It's just sitting there. This is sitting there, means this Friday we are not doing anything. Okay, but this pair, inward head and shoulder on this, it was here before when I started predicting that it's going to come down for a right shoulder. It did, and then I said it's going to go up, and it will always go for C wave. We'll have 5 wave in it. So we have wave 1, wave 2, and we are about to break this area. Wave 3, 4, and 5, finishing up wave 3 or C somewhere here. So Aussie is getting strong, and that's the reason. Pound Aussie, Euro Aussie, I keep saying we're going to wait for the retracement, hit it to the short side. Just the Euro Aussie today, it's at the TL, and if we need to come down, we need to break it. It is also a head and shoulder pattern. The chart I sent out already. You all should have it. So we need to break this, and come down here. If we do not bounce, this is the area. I think it's 50.27 or something. The high. Yeah, 50.29. Okay. This is 50.27 again. Oh, whatever. I have 50.26. This is 50.29. This is FXDD, I guess, and IBFX. They always have a little bit difference between the numbers. All right, let me read a couple of questions. Okay. Whoa. Noor, you did really good, man. 300 pip this week. Pretty good. Very nice. No? Yes, you see, if the more you practice, the more you get expert on that. Find the turning points. If not, then I'll send you the charts anyway, right? All you gotta do is wait for this 200 EMA stack. Just watch what the price is doing, which way it wants to go, and wait. Patience is the key. You patiently wait for like a hunter with the shotgun loaded, ready, and just wait and see where the wave is going. If it gives you, there are other things, other ways to explain, but I found this wave kind of thing is much easier for new people to understand. So all those three lines, they go on one side, and then expecting wherever we are expecting an up move or a down move. Then if we are right, then let's say if I on pound Aussie, I said it will go down. Then what we wait for? Not to go up, right? We want to see the price coming down. We want to see the price coming down below the wave. We want to see the price goes into the wave and give you the setup, either 1 minute, 5 minutes. All right. We want to see the wave below the yellow line, right? So when all that happened, then it is the confirmation that we are holding that area. So for all of those people, they're asking me that what is a confirmation, a daily close above this or below this? No. They're also good. But if I tell you 10 different things, believe me or not, all you got to do, you're going to lose. It's so much confusion then that, which one to look at, the candle or the trend line or the channel or what. So the best thing is that price action. Follow the price action. The wave goes with the price. So that's what I'm telling you. It's just, follow the wave means follow the price. Price is coming down, hitting our resistance and getting rejected. It start coming down. And then if it need to go down 100, 150 pips, obviously it's going to come down below the wave and then give you the setup, either 1 minute or 5 minutes. The only way it's not going to give you the setup is because if it is not coming down, right? Like around here, I told you that, the area I told you that look for short was here. So how are we going to look for short? How are we going to short this thing here? Our guideline is telling us no, big no. This is a bullish setup here, bullish scenario, right? But analysis is saying the short. So we wait. What we do is we wait, and don't worry about like, oh, we're gonna miss this move. Oh, no, you're not gonna miss. You're gonna catch up. You're gonna catch either 1 minute or 5 minutes or 15 minutes, some kind of setup. And even if you miss, it's better than missing. Missing is better than losing, right? So if you miss a move, it's much better than if you short here and then get red, and then close up here, only to find out that it's going in your way again. This is how people get. If you guys remember that I had a short, pending short, and then which got hit right around here. But as soon as it pops to the upside, my SL was there, got hit. That's fine. Thank you. It was 18 pip, I guess, 18, 20 pips, something like that. So who cares about that when you have something like this to catch later on? So I'm telling you because I know, and it's in front of you. Any of these entries, even this entry is all more than 50 pip, right? For let's say 90 to 40, 37, 81, 37, that's 40, 90, that's 50 pip from here to here. Imagine if you have one order here, one here, one here, one here, one here. Huh? Every time you see a setup, you put in a small order there and have your SL, all of these SL were regarded and everything. So anyway, any questions so far today? I know there is no setup. I didn't give you any setup or anything, but show you Euro Aussie is on the trend line. We're going to watch that. Aussie index is about to break to the upside, so need to be very careful for that. And if it breaks, then pound Aussie and all the Aussie pairs will be going down. So we're gonna hit them to the short side. Yen and USDX. Remember the USDX, by the way. Let me show you if I have it here. USDX also came very nicely, huh? It's like listening to me. See, all of this time, even from here, from A, I had this, that we're going to come down and then go up. And at the end of the week, we came down and we went up. Not only here, we are all the way here. So it's A, B, C, whatever it is, but, my count was right. Even though if it is not right technically, it could be something else. I'm going to reanalyze it to see if it is what really is 1, 2, 3, 4, 5. Then it's A, B, C. Is the whole thing is finished, or this A, B, C only A, and then we will come back for B and then go up for C. So we will come back here for B wave, maybe small triangle, or A, B, C, three leg correction to the B wave, and then 5 wave to the upside as a C wave. Because what I don't talk about is the time. Price is one thing, but you also have to consider the time for correction. So correction usually takes more than double time. So if you see the wave 1 is here, then wave starting point. So from here to here is like one impulse wave. 1, 2, 3, 4, 5 makes one impulse wave. This cannot be the whole correction. This is A, B, C is only wave A. Then you have B, then you have C in order to finish the whole thing. If I can show you on. No, I don't want to get involved in this now because I'm not ready and I'll make you confused. Like, okay, just let me show you this. See, this is the impulse wave we're talking about. So if 1, 2, 3, 4, 5, then ABC is not the whole correction for this move. Okay, this is A, probably we're going to hit come here for B, and then we may go back up to hit the trend line for a C wave. And that would be the correction for this whole thing, and it will be around 61%, right? See, 61% is coming right here, the TL. So we may come down here and then go here. There will be like a girdle type of thing. So it will be like from here to here, the down move, and then A, B, C, wave 1, wave 2, and then wave 3 will come down. Okay. So I know this Elliott wave is a little complicated for a lot of people, but if I keep barking like that, one day you will understand, believe me, little by little, it will set in. Okay, so every time, every webinar, I say a few things about the Elliott wave or the harmonic patterns. I didn't say anything about the harmonic pattern today, but remember this one? This was a nice one, right? I had it here. Beautiful. This is one of the most accurate and beautiful setup I have had in days. That in exactly 50% went up to 23% line and came exactly 88.6% before bouncing. And this was yen index, and based on that we shorted all those pairs. Anyway, so I'm gonna close it here now, just to show that how this entry need to be taken and what are the confirmation thing, not the daily close, high, low, inside bar or anything, because they usually don't work properly. They do, the candlestick formation I use tweezer tops, bottoms, hammers, engulfing. I use all the time. I look at them and get an idea that what's going to happen. I don't trade based on them, on the candlestick formation, but I, just like an edit confirmation that, okay, at SNR level are the most important thing. And at that point, you see these candlestick formation like right here. Exactly at 23.6% line, you have a shooting star, means that it's a rejection. So you may drop. And here we drop, drop, drop. Exactly 88.6% before bouncing back up. So this is how these exact calculated patterns in Elliott wave works. So it is very essential to learn this and do your analysis based on these patterns calculation, and then use magic wave strategy just to make precise entries. Okay, any question, anyone? No question? Okay then, so I'm gonna be closing it for today, and hopefully over the weekend I'll make some new charts, and then I'll send it out to you guys. Okay, so thank you all for coming and joining me. And I will be converting it and uploading on my website in maybe a couple hours. So those of you missed it, you want to see it, you can go and see it over there. All right. Just checking on the computer. Okay. Okay, so can I go now? No more questions? Okay, I had it on my question answer thing. I had it very messed up. I thought I'm not getting anything, but now I fixed it and I see tons of questions. Hold on just a minute. Let me check one by one. I have a question about your EA. Okay, the EA question about the EA is since they made the changes, they screw up everything, and I lost my momentum. So I'm gonna start working for weeks. I'm not working on those, but I will start working. Feeling that they probably have finished making changes. Yeah, we need. Excuse me, Noor. We miss a lot of entries. Believe me or not, if we catch all of those proper entries, no time to be a millionaire, right? Not reversal. We need to wait for turning points, SNR levels. Okay, just a turning point, even for a little swing. Remember, the swing and reversal is two different things. Reversal is the trend changer. Swing is between the trend. Like if there's a downtrend, but you make 5 waves in it. Swing one, wave one, then you swing changes and goes to the upside for wave 2. Then swing changes to the downside, wave 3, wave 4, wave 5, so on and so forth. Okay, Jamon, you're asking me how can I approach your trading setups? That's what I'm explaining this. You use the magic wave strategy. But the thing is, the setup, this is what I'm telling you, is SNR levels and harmonic. You need to watch the videos. This is how you need to learn. That's how you're going to learn the setups. Elliott wave theory and harmonic patterns. You have the documents. I send you those documents. Then you have videos in my website explaining everything, how the Gertley build up and what are the calculation, how the butterfly build up, and a calculation, how this impulse wave have 5 wave in it, each and every wave and their calculation. Wave 1 is how much, wave 2 is how much of wave 1, wave 3 is how much of wave 1, 1.618, wave 4 is 3.82 of wave 3. All of that you have in the webinars, all the calculation and everything. So this is how. Your question is, how can I approach your trading setups? That's how, by learning. Go and watch the webinars and you will learn. You know, if you don't learn, you will never understand how I draw these stupid lines here. You know what I'm saying? So all those colorful lines, where they come from? Because they are calculated by those Elliott wave theory and harmonic pattern and all that. Okay, these Elliott wave is they happen on each and every time frame. But for example, if you look in a 15-minute Elliott wave, and if you're trying to trade wave 1, that probably will only a 30 pip move or 40 pip move. Out of that, by the time you have the setup build up and this and that, 20 pips already gone. So what's left to do that? Okay, so that's what it is. I mean, Elliott wave happens everywhere. That's why when I send a chart, as usually you see that my charts are daily, right? Sometimes 4 hour and sometimes weekly. Hardly 1 hour, but 1 hour, pound Aussie, pound USD, not pound USD, Euro Aussie, because they move big time. All right, even on a 1 hour chart, like yesterday, small to the downside from 83 to 81.37 was a small move, but give you more than 100 pip. This is what it is. And some of those pairs like Frankie or USD Yen, that the whole move is probably 30-40 pip only. And out of that, you catch 30 or 40. So, and I'm not interested in that. So it depends. Different pairs, different time frame. I will not. I wouldn't look at 1 hour or 4 hour setup on a USD Yen kind of thing. You know, sometimes, yeah, if it's very good one, but usually, you know, it's a daily. Because we use these big patterns for direction, right? Let's say even this one, right? So we were here when I said we're going to drop. So when index is dropping means the yen is going to get stronger from here to here big time. So this distance, let's say if it's 100 pips, then that means 200 pip in the pairs. It's almost like double. So now you have more chance to short pound yen and Aussie yen, Euro yen, you know, to the downside for 200 pips. But if the same pattern, instead of 4 hour chart, if I make a 15-minute chart, by the time I send it out to you, it will be played out, believe me or not. Sometimes price moves so fast. So the accurate, if you ask me, the accurate charts are daily mostly. The most accurate and most lucrative charts with these studies are daily. If you're hitting a bouncing from a support on a daily, then imagine on a 500 chart, you can make an entry and still get 100, 150, 200 pip on that direction. But if you're bouncing from, you know, on a 15-minute chart, you're bouncing from a trend line, how far it's going to go before it turns? You know, it makes a small ups and downs. So, okay, now more question. The setup which was sent. Okay, Jamon, you keep asking me how much accuracy. Okay, the setup which you sent till now, how much its accuracy? You have to tell me. It is in front of you right now, and you're asking me that how much they are accurate? That's what I'm saying. All of them. These are, I showed you so many here. I showed you the USD, I mean, US index, and let me show you some more. if you forgot. Gotta go back here. I don't know when you joined. You probably joined recently, but based on that, let me see if I can. Okay, charts. Okay. All right, let's see Euro Yen. What happened there? Let me show you if I send out anything. Okay. Let me see. Okay, so this one, March 7, I send it out here, right? Send out this chart. And let's go see what happened on Euro Yen. Euro Yen. And it was, I think, a daily chart. Okay. So now you see what I'm talking about. I mean, I can go on and on and on. I send all those yen pairs to the short side, and look, the daily chart from here to here on the yen pair, it's a lot of pip. Same with the pound. You go and see on a pound yen chart, and you will see the same story. Okay, so hang on there and keep looking. Where's pound yen? Okay, is this the chart I sent out a few days ago? Okay, all right, so where we are now? It's a daily chart. Let me see. Pound yen. Where's daily? All right, so the chart I sent out was this right here, and we are at, so from here to here on a daily chart. On a pound yen, go count the pippage. Okay, Jamon, hold on, bro, hold on, take it easy. All right, you're not gonna learn everything in one set webinar. Okay, how about the stop loss? The stop loss is always, go read the PDF. The stop loss is always the other side of the wave when you make an entry. Okay, I'm gonna only teach you right now magic wave entries, nothing else. If you want to make an entry on any other way, it's up to you. You can do it. I'm not gonna stop you. All right, but it's dangerous. So wait for the setup. You know, even if you get 1, 2, 3, it's worth waiting, bro. Okay. Okay, this is, you see, here in the webinar, imagine, so I see it's like you type and send me messages probably like 20 in a row. So this is like a chatting. So if I do chatting, I can't do it with the webinar. You understand what I'm saying? I need to be on the chart explaining what it is. But if you ask me that many questions, then, you know, it's not, I can't do it. I hope you understand. Okay, so let me do it. Let me, you know, spend some time. Hold on, just watch the webinars, recordings, okay, and start learning step by step. Email me all the questions you have. I'll answer you, and then I'm gonna make separate videos and send it out. This is live video, and everybody else is waiting, you know, too. Okay. All right. So this is it. It's already more than 1 hour. So I gotta go. So thank you all coming and joining me, and I hope you know, learn something today, at least how to make an entry, how to wait for the turn, and, you know, see the magic wave and follow it and make a precise entry. Put a stop loss right behind the wave, and usually on a 5-minute chart is not more than 20 pips. Okay. All right, Jamon, I have 100 people asking me phone number. Come on, I can't talk on the phone, and I can't even talk on the chat. I have no Skype on my computers, because that, what it does, it takes my time away from analysis. And if I don't do proper analysis, I cannot send you good charts, and you're gonna be losing money. Okay, I'm gonna making mistakes. Just like I didn't make a mistake, but I missed a good move last week because of the death of my friend. You know what I'm saying? So no chatting, no phone, no Skype, please, because I have to spend all night just to make these charts, just to analyze what is happening, Elliott wave and harmonic and support resistance, and draw this and draw that. It's a lot of work. It's not that doesn't happen in in a blink of an eye. Okay, it needs it requires a lot of work. Believe me. Okay, so just be patient. Everybody's struggling, I know, but you have to be patient and learn. Okay. So thanks for coming, and have a nice weekend. Today is what? Yeah, Friday, right? Okay. Oops. All right. So I gotta run. And see you guys maybe Monday or Tuesday. I'm gonna do another webinar and send you some charts, setups with the setups. Okay. All right. Thanks for watching. Have a good